Do you want an edge in the stock market? Well, you'll need to know technical analysis. So buckle up because I'm going to introduce you to the world of technical analysis and charting. I'm Vico Konstantinos, and my goal is to support your investing through quality education and analysis. If you want to support me, you can like this video and please consider subscribing to my channel if you enjoy my content. Before we start, have you guys ever scraped your nose on the bottom of a pool? I don't know how I did it, but I somehow managed it. So what is technical analysis and why is it important to your investing success? According to Corporate Finance Institute, technical analysis is a tool or method used to predict the probable future price movement of a security such as a stock or a currency or any sort of financial instrument like an index, etc. And it's based on market data. In simple terms, technical analysis is just analyzing the price action of a stock or something similar to try and get some clues regarding the future direction of that stock. In technical analysis, price action is king because it represents all participants in the market: buyers, sellers, hedgers. Anyone who has bought and sold a stock will be represented on that stock price chart and will be available for everyone to see. So past price action can give us an indicator of future performance. For example, if a stock has gone up over the past 2 years, we might assume that that stock will continue going up into the future. Similarly, if a stock has been trending lower, as in the price has been going down over the past few years, we might also assume that that stock might continue down to lower prices. Now, technical analysis can give you an edge, but it's definitely not perfect, which is why a lot of people use it in conjunction with fundamental analysis. Now, fundamental analysis is all about looking at the financial information of a stock and trying to work out intrinsic value to see whether it would be good value to buy at the current time or bad value, and also to consider future income, earnings, ability to pay off debt, and all those types of factors. So if you can research value for a stock and also combine that with technical analysis, which gives us a view of what's been happening in the actual price, you'll definitely have an edge over market participants who are not willing to put in the effort to research the financials and also to consider the technical analysis or price charts. To get started in technical analysis, you're going to need a charting software. Now, most online brokers will have their own complementary charting software that you can use. For example, ComSec, E-Trade, or many others. However, there's a great free version that I use, which is called tradingview.com. Tradingview.com has a free version which includes ads that you'll need to watch. However, it's excellent and does have a lot of indicators that you'll be able to use when you want to dive deeper into technical analysis. You'll have to go through the process to log in and create an account. And once you've done that, we want to select chart here. With most charting software, if you know the actual code of the stock you're looking for, you'll be able to navigate that way, or you can usually just type in what you're wanting to chart. Now, first thing I want to have a look at is the ASX 200, which is the top 200 stocks by capitalization on the Australian Stock Exchange. This is just to give us a bit of a look into the actual layout of a chart. Now, you can use the scroll wheel on your mouse and that can actually move the dates back and forward. A lot of charting software has that now. Otherwise, there might be an actual scroll bar where you can scroll it. But that's really handy because it's very good to go back and to get a large view picture. The first thing to set with your chart is the actual time frame. So if we go up here, you can select a monthly time frame, a weekly time frame, or a daily time frame, or even less than that. If you're wanting to look at a long-term chart, you'd usually start from the highest, which would be monthly, and then you can work your way down. So if I select monthly for the ASX 200, we can go right back and get a very long view picture. So TradingView has information from 1981, and different software will go back different amounts. Looking at a long-term chart like this is excellent just to be able to see where the chart's going. Generally, on the left of the chart, if it's down low, and if the right of the chart is higher, that means whatever you're looking at has gone up over that time frame. However, you can see that during that time frame, there's been some spikes and there's been some sharp falls. In 2007, 2008, we can see that big spike and fall, and that was a result of the GFC, the global financial crisis. Going forward, we can see this latest spike down, which was a result of COVID and the panic surrounding the initial stages of COVID pandemic. Since then, the ASX 200 has rallied and remains just a little bit above that pre-COVID level, sitting currently around about 7,200 or 7,300. So my advice would be, when you first start charting, when you first start looking into technical analysis, look at some of the broad indexes like the ASX 200 if you're looking at the Australian Stock Exchange, or maybe the S&P 500 if you're looking at the US market. So the code for the S&P 500 is SPX, and you can select that. Now, just looking at this chart, you start to just be able to make comparisons if you've looked at different indexes. So in this case, what I'm seeing is this spike down was the global financial crisis, but since then, the S&P 500 has rallied super strong, has rallied a lot stronger than what I would say the ASX 200 has done, and that's just looking at the charts on a comparison, making sure that we're looking at the same time frame, which in this case is monthly. Now, as well as the time frame, you'll need to know what type of chart you want to look at. In TradingView, you can get there by this icon here. Now, the main charts that I've seen is the bar chart, the candle chart, and the line chart. If we start with the line chart, now the line chart smooths out the price action. So we can see our long-term chart of the ASX 200 here, but it doesn't have all the busyness of the bar chart or the candle chart. If you're just interested in looking at the actual direction of something, a line chart, it's a great way to go. Now, if we select the bar chart, it gives us more information than the line chart does. Each bar represents the time frame that you've selected. So for example, in this case, we've selected a monthly chart. So each bar on this chart represents one trading month. Now, if we look at this second last trading bar on the chart, what this represents is the month of November 2021. So the entire month that you're able to trade, that's what it represents. Now, the left branch represents the starting price for that trading month, and the right branch represents the closing price for that trading month. Now, the actual bar height represents where that instrument or that stock has traded over the month. So for example, for this month of November 2021, it traded as high as about 7,480, and it traded as low as about 7,183, and then it finished at 7,255 roundabout. Now, if we change the time frame of the chart, so from this case, from 1 month to 1 week, what that means now is each bar represents actually 1 week of trading. So for a stock, it represents the Monday to Friday that stock has traded. So as an example, during COVID, when the pandemic first started, you saw a big monthly line that goes all the way pretty much down. But when you look on the weekly chart, you'll see each week of trading during that period. So we can see here, the ASX started for the week, trading week around 7141 or around about that. And when COVID hit, It traded all the way down here and finished at this right branch around about 6431 for this week, which is February 2020. And then you can see the following week was down. It went up a little bit during the week, went down and closed here. And then the following week started at that same point, traded all the way down here, came up and finished here at that right branch. So it just gives you a bit more information, and you'll also get more information from changing this down to daily. And then we go into each day's trading. So if we wanted to look at that same COVID period, you'd see each trading day and what's happened for each trading day. So whereas the weekly chart will show 5 of those trading days, all in one bar, for the daily chart, you'll see actually 5 daily bars to make up that week. So people who are wanting to see the day-to-day price action for anything will look at the daily chart. So when you're getting into charting for the first time, I recommend starting with a long-term time frame, perhaps monthly, and then going down from there. Then you might look at the weekly and then look at the daily. Unless you are going to become some sort of day trader, there probably wouldn't be any need for you to drop the time frame to less than 1 day, as that would become too busy for most investors who are looking at making long-term positions. Now I'm going to change the time frame back to month, and now I'm going to show the candle chart, which is probably the go-to chart for many technical analysts. In TradingView, you want this to be on auto because that will allow you to scroll through the chart and it will bring the information in the actual visible screen. Now the candle chart shows the exact same information as the bar chart, it's just in a different format. First thing to consider is the color of the candle. If the candle is green, it means the stock or the index has finished above where it started for the time frame. For this bar here, it means the month started trading at the bottom of this candle body. It finished at the top of the candle body, and the wicks on either side represent where that instrument has traded over the time frame, in this case 1 month. If the candle's red, the top of the candle body represents the opening price for the month or the time frame. The bottom of the candle body represents the closing price for that time frame. And the wicks on either side always represent where that instrument has traded across the time frame. So the candle chart shows the exact same information as the bar chart, the opening and the closing and where it went during the trading period. However, a lot of people find it a lot more visual and easier to digest. For example, when COVID hit, we can see these massive red candles, and that signifies great panic and fear in the market. And you can easily see that by this massive red candle, which is the second month after the COVID pandemic. The other interesting thing in this candle is you can see a large wick at the bottom of the candle. This shows us that during that trading month, the price went all the way down to about 4,400 for the ASX 200, but the trading month closed quite a bit above that, around about 5,000. Now, once you learn a bit more about psychology of the market and how there's massive greed and massive fear and a whole lot of emotions that go into the stock market, you can make certain assumptions when you look at the chart price action. When I look at this big down candle with a long wick, I think to myself, there must have been massive fear, massive panic to drive the price right down. But during the month, there must have been quite a bit of buying from people looking for bargains or looking for good value. So the price actually ended up quite a bit above the lows for that month, which signifies to me that someone believes there's good value or the buyers have managed to bring it up a fair way. So that might give you a bit of confidence, for example, the next month to start buying. This is some of the critical thinking and the observations that can be made just by looking at price action. Changing the time frame on a candle chart works in exactly the same way. So we can change it to weekly. Now each candle represents one trading week, and we can change it to daily. And each candle now represents one trading day. So just looking at this daily candle chart of the ASX 200, we can start to look for a few things. For example, are there more red candles than green candles? So are there more trading days that have ended lower than where they opened? In this case, yes, possibly there are more red ones since around August 2021. And you can see this high, there hasn't been another high above that. So it's been trading fairly flat, slightly lower. And you can just tell that just by looking at the chart. So you look for any highs, in this case around 7,600, and the current price around 7,300. So since August, the ASX 200 has dropped around about 300 points, which isn't a massive amount, but you can see that it isn't trending upwards at the moment. It's probably trending more flat and slightly lower. So that's a shorter term view. So when we look for trends, so when we think about is something going up or is something going down, you'll start off with the long-term view, so the monthly chart. And as you know, looking at the monthly chart, over a very long period, ASX 200 is doing excellently. But that's over many years. So if you're looking at the weekly chart, you might consider a few years. So you might take it back and have a look, okay, since 2019, what's been happening? So from this low here, around about the start of 2019, the price at the moment is quite a way above that, but we've had this massive COVID spike in between. So when you're looking at the weekly chart, you might look at a few years to see what's the trend been like over the last few years. And then for the daily, you want to see what's the latest price action been doing. So for example, the latest 6 months or the latest 12 months. And that will give you a picture of the short-term momentum. And when you look at indexes like the ASX 200, it'll give you a sense of over the short term, so over the last 6 to 12 months, is the market bullish? So bullish means, is the market strong and going up? Or is the market bearish? And bearish means, is there a bit of fear? Is the market starting to fall? Or is the market simply trading sideways, which would indicate a bit of indecision? The buyers aren't able to overpower the sellers and the sellers aren't able to overpower the buyers. So it stays in this sort of trading range. So I'd encourage you to look at the major index from wherever the country that you live in. In my case, Australia, it's the ASX 200. Get a sense for how your country's stock market is going, and then start looking at your favorite stocks. In Australia, the banks are very popular. So I'm going to bring up a couple of banks. First, we'll look at the Commonwealth Bank of Australia. Always starting from the longest time frame that you want to have a look at. In this case, this is the monthly. So going back to the 1990s gives us a good picture of how the Commonwealth Bank has performed. And then I'll look at the weekly. And for this, I just probably want to see maybe since around about 2019, what's been happening. So we can see after the COVID period, the Commonwealth Bank has surged strongly, has only just recently come down a bit. Now let's have a look at National Australia Bank just for a comparison. So National Australia Bank of Australia, going to the monthly chart. So if we go back to the 1990s, we can see doesn't continue up as strong as the Commonwealth Bank did. Since around about 2007, this high has not been able to continue higher than that. So that gives us a good comparison and a different picture for National Australia Bank. And if we look at the weekly chart for the last couple of years, so let's go just to 2019, we can see COVID period spiked lower and has since regained some of that ground, but has not been able to continue going up higher at this stage. So I encourage you, get out and have a look at all the different stocks that you're interested in. When you're starting, it's probably good to use the longer time frames. So I'd suggest the monthly and the weekly. And that way you'd be able to see the really long trend, but you'll also be able to see the shorter trend over the last 1 and 2 years. I'm just giving an introduction into technical analysis today. There are so many patterns and indicators you can use to analyze the market. A very big indicator that we often will use will be volume. And that's just analyzing what the volume was. And you can do it in time frames, and it will just join with whatever chart you're looking at. So for example, if you're looking at the Commonwealth Bank and you have a weekly chart, you'll be able to see the weekly volume for that trading week. So there's so much more in technical analysis that we can get into, and I'd love to hear if that's something that you'd be interested in. Because if you are, we can get more technical regarding indicators, patterns, and also strategies for actually investing and trading. What do you think? I'm Biko Konstantinos. Thanks so much for watching my video. I really appreciate it. I wish you all the very best during this Christmas period, and I'll catch you next time.